Every Monday to Friday, this is Peter Lewis's Money Talk. Money Talk.
Good morning, this is Peter Lewis, welcoming you to my podcast Money Talk for Tuesday the 16th of January 2024. Thank you for listening and making this show one of the top 15 most listened to financial podcasts in Hong Kong, according to statistics from Podstatus. I really appreciate you taking the time to listen. This podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 30 million customers across 10 countries. In today's business and finance headlines, a delegation of former top US officials met leading political figures in Taipei Monday, saying they hoped for continuity under the new administration of Taiwan's President-elect William Lai. A delegation led by ex-National Security Advisor Stephen Hadley and former Deputy Secretary of State James Steinberg met with the Democratic Progressive Party's Mr. Lai, who won an unprecedented third consecutive presidential term for his party on Saturday. In a meeting with President Tsai Ing-wen, Mr. Hadley said that Washington's commitments to Taiwan were rock solid and said it hoped to continue working with Taipei to safeguard peace in the Taiwan Straits. The People's Bank of China left one of the country's most important interest rates unchanged on Monday, defying economists' expectations for further easing to boost a weak economy. The PBOC kept the interest rate on just under $140 billion of one-year medium-term lending facility loans to the banking system unchanged at 2.5% on Monday. Weaknesses across China's economy, including deflation and a slowing real estate sector, had fueled expectations of further interest rate cuts. The European Central Bank may defy market expectations and hold off on starting interest rate cuts during the whole of 2024, the bank's governing council member Robert Holtzmann said Monday. Asked about those who call for the first rate cut to take place as soon as April, Austria's central bank governor told CNBC, "I'm afraid those people will be deeply disappointed." He added, "Everything we've seen in recent weeks points in the opposite direction, so I may even foresee no cut at all this year." And Germany's economy contracted 0.3% last year as high inflation, rising interest rates and elevated energy costs weighed on Europe's largest economy. The Federal Statistics Office said GDP was still above pre-pandemic levels after last year's contraction, which followed 2 years of rebounding output and left it 0.7% up from 2019. On today's Money Talk, we're joined by Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia, Will Denya, US Economist at Gavekal, and our US Correspondent, writer and broadcaster Barry Wood. And if you want to get in touch, please go to my website, peterlewismoneytalk.substack.com. And while you're there, please take a look at my daily Asian newsletter.
Peter Lewis's Money Talk.
US stock and bond markets were closed Monday for Martin Luther King Jr. Day. Japanese and Indian stocks led Asia-Pacific markets higher on Monday. Japan's TOPIX rose 1.2%, breaking past 2,500 points for the first time in nearly 34 years. Japan's Nikkei 225 continued its record-breaking run, with the index closing 0.9% higher at 35,902. The Nikkei 225 is up 7.3% so far in 2024. Taiwan stocks rose after voters handed the ruling Democratic Progressive Party a third straight presidential term. The Taiwan-weighted index added 0.2%. In India, the Nifty 50 index rose 0.9%, breaching 22,000 points for the first time in its history, boosted by a rally in information technology companies. And the BSE Sensex index rose 1.1%, up for the fourth straight session to a fresh record high above 73,000. Chinese equities edged lower on Monday after the People's Bank of China announced it would keep its medium-term lending facility rate, a policy tool that helps determine liquidity in the financial system, unchanged. Hong Kong's Hang Seng Index fell 28 points, or 0.2%, to 16,216, and the Hang Seng Index has retreated almost 5% since the beginning of the year. That's the worst start to a year since a 10% drop in the first 2 weeks of trading back in 2016. The tech index slumped almost 2% after losing 3.4% last week. It was dragged lower by an 11.5% plunge in shares of tech giant Baidu, which is the most in more than a year, following a report in the South China Morning Post that alleged a tie-up between the company and the country's military. Baidu later denied that report. On the mainland, the CSI 300 closed 0.1% lower. That's close to a 5-year low. The Shanghai Composite Index added 0.2% to 2,886, rebounding from its lowest levels since May 2020. And investors are awaiting Chinese fourth quarter GDP figures and December activity data on Wednesday. And this morning, further declines projected for Hong Kong stocks. Futures markets pointing to the Hang Seng opening about 120 points lower. That's 0.7% at 16,100. And you can get more details on the latest market movements in my daily newsletter, which you'll find at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Despite US markets being closed, there is plenty of business action going on to talk about, so let's welcome our guests. We have with us Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia. Morning, Mark.
Good morning, Peter. Good morning, everyone. And happy year of elections, if you can say that.
It is. Half the world is voting this year.
That's right.
And also with us, Will Denyer, who is US economist at Gavekal. Happy New Year, Will.
Happy New Year, Peter.
And also with us is Barry Wood, our US economics correspondent. He's normally in Washington, D.C. I don't know if it's as freezing as those pictures that we're seeing coming out of Iowa this morning, where the Republicans are having their caucuses. Morning to you, Barry.
Good morning, Peter. We have about 1.5 inches of snow. So we are officially in winter.
Yeah, certainly I am. Wow, that sounds pretty impressive over there. Let's start over here in Asia, though. In Taiwan, in particular, a delegation of former top US officials met leading political figures in Taipei Monday, saying they hoped for continuity under the new administration of Taiwan's president-elect Lai Chih-teng. A delegation led by ex-National Security Advisor Stephen Hadley and former Deputy Secretary of State James Steinberg met with the DPP's William Lai, who won an unprecedented third consecutive presidential term for his party on Saturday. Mr. Lai won with just 40% of the vote. That's the lowest winning percentage since 2000. And his ruling DPP party also lost its majority in the legislature. So, Mark, let me start with you. What was the message, do you think, from Taiwanese voters over the weekend?
Well, that they wanted the status quo to continue in Taiwan, which is not independence. I guess it's what's more or less de facto independence. But they also wanted a more diversified government. So they apparently liked some of the things that the other parties were saying. So they split their vote. In a sense. And in fact, they reduced their vote, obviously, for the DPP because Tsai Ing-wen won with over 50% of the vote when she was reelected the last time. This time, William Lai had about 40% with over 30% for the Kuomintang candidate, Mr. Hao, and so on. So I guess it sends that message, not radical, but willing for a change, which will make the situation, I think, a bit problematic within Taiwan. We'll talk about outside of Taiwan as well, because it might be harder to get bills passed, including defense spending and other areas, which was the case when there have been split governments in the past. Externally, China so far has been relatively quiet publicly. They've been critical. They're using typhoon-like language in describing the election. But we'll see what happens. Not so much from this delegation, but I think the U.S. Speaker, for example, is talking about sending a delegation of current officials from the U.S. to Taiwan, and I don't know if he'll come, but if others come and that happens, there might be more of a reaction going forward.
Is the idea of unification, I mean, William Lai was very careful in his wording not to talk about being pro-independent, although he does seem to describe it as being pro-sovereignty. Is the idea of reunification with mainland China in the minds of Taiwanese people, is that moving further away and making it more and more difficult for China to achieve that aim?
Well, it's a very careful definition, right? In the sense that, they don't want to. I think by all kind of polls, most Taiwanese don't want the current situation to change. So that would mean not to reunify. But I think many of them would like to see maybe a revival of the economic ties that existed over time between Taiwan and China, and as you know, investment has just dived. It's just dived over the past few years between Taiwan and China, and it was strongest during the time of Ma Ying-jeou, who was the last Kuomintang president.
Yeah, yeah. Barry, how much on the agenda, on the radar screen, was this election in the US?
Well, I want to say not much, and I think that's where I'll settle. The fact is that the American media and I think the Congress has been focused on this war in Gaza, Israel, focused on Ukraine, focused on funding. And of course, there was interest in this election, don't get me wrong, but it just didn't leap forward. I thought the most significant thing, Peter, is that when President Biden, right after the election, results were known, was walking out of the Oval Office to his helicopter, he was asked about something. It wasn't even Taiwan. And he said, I do not favor independence. That is a scripted remark, but I think it's very significant. The Americans want to be seen, the administration wants to be seen as continued status quo. Nothing radical to change as a result of the election.
So in the US eyes, this doesn't really change the trajectory of US-China relations?
I don't think so, no. Even look at this delegation that has gone. I mean, sure, these are respected former officials, the key being former. Right. So that's not a problem, I wouldn't think. I don't think the Chinese are going to identify it. But of course, Mark, you and Will are much closer to this than I. But I saw this as not a shrug of the shoulders, but a satisfaction that democracy prevails. And by the way, they got the results so quickly. We couldn't do such a thing. and it just goes on.
I was going to ask you about
they had an over 70% turnout, too.
Exactly.
Which is a little higher than the U.S., a little higher than Hong Kong, especially our recent elections. So.
But I think it was down from their previous election, which is a little bit interesting. On the delegation, I agree that the group was carefully chosen, and I've actually heard that one strategy there was Biden was trying to get out ahead of a congressionally led delegation that might be more incendiary. So send in some known hands and kind of control the situation there. Whether Congress still sends somebody, a group or not, remains to be seen.
Yeah, if Congress sent current serving officials, that would be a different kettle of fish altogether, wouldn't it? I think the Chinese would be far more upset.
Peter, but let's not forget, Nancy Pelosi was a Democrat. The House Speaker today is a Republican. He may not want to replicate what Nancy Pelosi did by herself going to Taiwan. So I think he'll be careful on this.
Well, I'm thinking about the intersection between this election and the US economy. It's clearly, I suppose, the semiconductor sector, isn't it? That's the dominant sector in Taiwan. William Lai's vowed to continue to assist that sector. He said in his speech afterwards, China and other countries must also cherish Taiwan's role in the global chip industry. I mean, this is where the US has a lot of dependencies upon Taiwan, isn't it?
Well, I think it goes both ways. I think the semiconductor industry around the world, and including in Taiwan, also depends on U.S. technology for part of its production processes. So, and as you are fully aware, for a few years now, since Trump, basically, we've been having a spat there. So yeah, it goes both ways. The U.S. could cut Taiwan off of some of the technologies it needs. It's obviously not planning to do that. Across the strait is a different story.
And how successful has the US been in trying to wean itself off of supply chains that go through Taiwan? It's made a big effort to do so, but has it been successful?
Not entirely. The U.S. and the world is still dependent on Taiwan for semiconductor production. They're just such a major player. I don't have the numbers in front of me. But yeah, the U.S., like other countries, is fairly interdependent there. And I frankly am glad of that. I like global trade, and I hope that countries are always dependent on each other, because when they're not dependent on each other, they can afford to be more hostile enemies.
And what's happened to these plans to get companies like Foxconn to open new plants in Arizona, and TSMC to open plants in the US as well, albeit with very large subsidies from the US government? I'm sort of getting the impression that those plans have run into the sand a little bit.
Well, that's
Go ahead, Barry.
Go ahead, Will. Go ahead.
Well, I was just going to say, I think what they found is that there's a reason why Taiwan has been so successful. It's hard to match the level of expertise, government subsidies, labor costs that you have in Taiwan. You go to the U.S., and particularly with a very tight labor market today, and not as much expertise in that area as you have in Taiwan, per population. It's just a different. I mean, there's a reason why Taiwan has been so successful there. It's very hard to replicate.
Yeah, I think you're right on that, Will, and I also think you're right, Peter, to talk about sort of evaporate, that's the wrong term, sort of sinking into the sand, because that's Phoenix. But it's going forward. That's the bottom line.
Go ahead.
But it's moving slowly.
No, I remember when there was going to be investment. I think it was by Foxconn in Wisconsin, right? When Paul Ryan was there. We haven't heard much of that since. But also the other thing is going forward, Peter, in terms of the reaction from the mainland, we don't know what it's going to be going forward. But of course, remember what happened when Nancy Pelosi was there. Things like a mock blockade were instituted, and those are the sort of things that I think that certainly our members would worry about. Even if it wasn't substantial, just the indication would worry people and would maybe move supply chains more quickly than they wanted to, or when they were ready for. So I think everybody will be watching that closely too, to see if there are any moves that really affect the economy and affect trade and movement of trade.
Do you think China will change its approach to Taiwan? Because its approach really over the past few years hasn't worked, has it? Certainly not in terms of changing minds and hearts and soul in Taiwan. People seem to be moving in their own direction. They see themselves as Taiwanese, not Chinese. Is it maybe, do you think there's a chance that maybe instead now China will engage more with the DPP? Mark?
William Lai has suggested he wants that. We don't know. My guess is probably not. I don't think the rhetoric will change much, but in terms of behavior, that's what you have to look at. And if China actually moderates what it does or doesn't do too much in response, that would be indicative. But one of their spokespeople said this election represents a dangerous situation of high winds and urgent waves, which is not exactly reassuring.
And it's
I think.
Sorry, Barry.
I was simply going to say, Peter, that if you look at the 20 years that preceded the last 10, there was this continual interaction economically between Taiwan and the mainland. The flights between Taipei and the mainland were up each year. I think that's the way that both sides, I'm talking about the people, not governments, want this relationship to evolve. And I think that the setbacks that have occurred in the last couple of years not only are regrettable, but it's going to take a lot of effort to rebuild them. But I think that's the way to go. I mean, as lots of people in Taiwan say, and I've only been there once in May, and I know all three of you have been there often, it's a peaceful place, and nobody wants any conflict. And of course, the Taiwanese know that if there were a war, they certainly would be obliterated quickly.
What has been significant is Taiwanese investments, which have been approved by mainland China. They're at a 22-year low now, and also investments the other way. From China into Taiwan. They're at their lowest since mainland investment first started back in 2019. Mark, I presume that's something that your members are experiencing firsthand.
Yeah, absolutely. As I suggest, the highest level was under Ma Ying-jeou, who's Kuomintang president, with whom China felt relatively comfortable. and who definitely reached out to China and really oversaw the period that Barry just described in Taiwan and China relations. Getting back to that, I think, is going to be very difficult. So our members, many of them, just like with China, they're diversifying their supply chains as much as they can. With Taiwan, as I think as Will and others have suggested, that's a bit more difficult. It's a bit more difficult to do that very quickly, given the quality and the technology in Taiwan, especially in semiconductors.
Okay, well, let's turn our attention to the US economy. We've had some inflation data out at the end of last week. Headline CPI rose 3.4%. That's an increase from the 5-month low of 3.1%, which was seen in November. The core inflation rate was at 3.9%, slightly above expectations. The PPI, though, declined unexpectedly. The producer price index decreased minus 0.1% last month. I mean, Will, how do we reconcile these two inflation reports? On the one hand, you've got the CPI report indicating that a sort of above trend inflation maybe not going away as quickly as we thought, but then you've got the PPI, which seems to suggest that this inflation is going to continue. How do we reconcile this? What's the message?
Well, I don't think we should get too caught up in the details of the vagaries of the different inflation measures. We're going to get another consumer price index out, the PCE price index, in a few days. That I think the CPI measure, it has some oddities, things like in medical care, because it only counts out-of-pocket expenses. If you have any shift in the share of the bill that's paid by third-party payers like the government or insurance companies versus the actual consumer, you can show big swings toward inflation or deflation when in fact prices haven't changed. It's just the nature of who pays the bill that has changed. We're seeing some of that in CPIs. So part of the reason I think we saw an upside surprise in CPI was you had a pretty fast uptick in medical care services costs after last year showing deep deflation in that sector. In reality, we didn't have deep deflation in medical care services last year. It was just an oddity of the way they construct that index, which is one of the reasons why the Fed favors the PCE. So after telling you we shouldn't get too caught up in the oddities of the different indices, I've just done it. But I think what we should do now is, having said that, abstract away from that and look at the big picture, which is I do think that the trend is toward disinflation. That trend, by some measures at least, CPI, for example, lost some momentum in the second half of last year, kind of quit falling. The PCE has shown a little bit more consistent downtrend, but on the whole, if you take them all as a group, we had disinflation from the very high peaks in mid 2022, and so the big question going into the new year, which has now begun, is will this disinflation trend continue or not? If it does, rate cuts from the Fed are in order. I think March is probably a little bit early to be. I mean, the market's very convinced that we're going to get rate cuts starting in March. We might, but I think there's a pretty decent chance that the market gets disappointed on that. But if we do continue with this disinflation trend, which is my base case, I do think we're looking at rate cuts sometime this year.
But the market's now pricing in 7 of them. That's basically a rate cut at every single meeting this year. That seems very aggressive, doesn't it?
Absolutely. But Will, let me ask you, are you saying then that the latest CPI report was a blip? Because going from 3.1 annualized or 12-month inflation to 3.4, that's not what I would call disinflation.
Yes, I am basically saying I think it's noise. So, I mean, if you look at over the last 3 months, 6 months, excuse me, in CPI, the 3-month average was actually below target, below the Fed's 2% target. If you look at 6 or 12 months averages, it's still above, as you said, 3.4 for the 12-month. But the trend has been toward lower inflation. Now, 1 month, we should never really put too much weight in 1 month of inflation data. So yes, short answer is I do think it's a blip. I could be wrong, and I do think the Fed is data dependent. I think politics may play in a little bit, but to me, the politics are if Powell does not want Trump in office, which I'm pretty sure he doesn't, the way Trump treated Powell when he was in office. But what does that mean? That means, okay, what do you need to do to keep Trump out of office? You need to bring inflation down because inflation was not very popular for Biden. If that reignites, that's not going to help Biden any. You need to keep the U.S. out of recession. Okay, so what's Powell's politically motivated goal? A soft landing. Well, what was his goal before politics, got involved? A soft landing. So, whether he can actually pull it off or not remains to be seen. But so far, he's done. He's either been lucky or good. So I think right now we're on the trajectory toward a soft landing. Hopefully it continues. On those, the number of rate cuts that you mentioned, Peter, is quite aggressive. If we get a soft landing, I think that's probably a little bit aggressive in terms of the number of rate cuts. I think what the market is pricing in is at least some risk that we get a recession. And if we do, then you're talking that many rate cuts, if not more. But if we don't get a recession, then I think we're looking at a modest number of rate cuts. I don't know how many, but less than the market is currently pricing.
How much is China's deflation impacting the US?
A lot. I think it has brought prices down. You're aware I spend a fair bit of time in Walmart and Target, just wandering the aisles and looking at prices. I see a lot of retreating prices. That's not a big thing because if you look at automobiles, for example, that's still a big factor. Although gasoline certainly has been a disinflationary effect, and China has nothing to do with that. But I think China does have an impact. Peter, if I could just pick up on a couple points, I think we have to speak in terms of more precise wording. I think we've had the soft landing. I mean, after all, the analogy is an airplane, and you're going to come in for a landing. Well, I think the landing was somewhere in the last 6 months. So we've landed, and the Fed has been super successful. But maybe part of the reason that the market specialists are looking at so many likely rate cuts in 2024 is the election. So certainly by June, and a slowing economy, which is what higher interest rates are intended to achieve, I think that you could look at interest rate cuts by mid-year because of the election.
Mm. But normally, in the normal run of things, you don't get 7 rate cuts in a year because of anything good. It's only something bad that would cause 7 rate cuts, whether it be a financial crisis or something along those lines or a deep recession. It can't be a good thing, can it?
Yeah, I'm more with Peter on this one. I think there's strong arguments on both sides, but as far as the politics go, I think if it was just politics that were driving rate cuts, I think we'd get a lot fewer than that. I think if the economy wasn't looking weak, if inflation wasn't quickly falling below target, and we may get both of those things. And if we do, then I think those number of rate cuts will be justified, but that wouldn't be on politics. If we don't see that, if inflation is either at target or above, if the economy is still chugging along in terms of growth, then 7 rate cuts for no reason other than politics would be pretty obviously for no reason other than politics, and I think would open up the Fed to criticism, and it would
won't do that.
By extension open up Biden to criticism of goosing the system for his own benefit.
Yeah, I agree. The Fed's not going to do that.
I don't think either the White House or the Fed wants to open itself up to that criticism. So I think we only get that many rate cuts if we see an overshoot on the downside in terms of inflation and or a pretty significant slowdown in growth.
Mark, one of the things that stood out in the batch of data that we've seen recently is Chinese exports to the United States. They've seen the biggest plunge in nearly 30 years, down over 13% compared to a year ago. I mean, is that something that you're noticing over here?
Sure, it's changed. I mean, the patterns have changed. This isn't all politics. It's partly politics, partly geopolitics, but it's partly a change in supply chains and change of demand and a lot of other factors, and also diversification, as certainly a lot of our members are one of the things that's very common among many of them, even if they're committed to China, they're diversifying considerably both ways. And of course, if they're exporting to the U.S. or exporting from Vietnam or from somewhere else rather than from China, to lessen the political trade winds more or less as well. So yeah, that's an indicator. Is this going to continue for a long time? That's hard to tell, but it seems like we've had a shift in patterns.
Mark, is that rather than China or in addition to China? Is it a China plus one?
It's China plus 1 and 2. So most of our members haven't backed out. In fact, some of them have recommitted, but at the same time, almost all of them are finding ways to be less dependent on China. There are some examples of some that have really moved away from China. That was for business reasons as much or more than geopolitical reasons. And those are in areas like garments and others where they move toward South Asia and Southeast Asia.
Well, you said earlier you like global trade, you like countries being interactive and to a certain extent when it comes to trade depending upon each other. I presume that this type of plunge in trade between China and the US is not good for China, but it's not particularly good for the US either, is it?
Well, it's not. Let me just say, during the many delegations that we took when I was from the American Chamber and others to China during those times when trying to get China more involved with the global economy, which eventually resulted in them joining WTO, which has become very controversial.
You succeeded, Mark.
Very controversial, of course. But nonetheless, but what we pointed to, and this was the U.S.-China Business Council, always put out statistics on exports between China and various states, and every state. And we pointed out to each state, it was significant for them in terms of their business because they benefited from that. Even if there was a deficit, still it created jobs, it created new industries and so on. Even if that's still true to some extent, it's true to a lesser extent, and it's very hard to make that point and have any credibility these days now. So things have changed.
Will, you like trade? You said so earlier. I mean, this is...
I do like trade. I do think, I mean, it depends on the reason for why companies are, or why trade is falling. I think some of it, I suspect, is trade getting rerouted. So some of it may ultimately actually be coming from China, but because it goes to another country, it gets counted elsewhere. But to the extent that trade from China to the U.S. is actually in reality declining, to the extent that that's because of protectionist measures from the U.S., which we've obviously had plenty, to my mind, that's a bad thing. That's a distortion of the market. That's policymakers getting in the way of consumer wants. To the extent that that is companies recognizing, okay, yes, global trade is good, globalization is good, but there's a robust way to do that and a fragile way to do that. And we just got a big lesson in the downsides of building the system in a fragile manner with COVID, as well as the trade wars. And so, such a large proportion of global trade was coming from China. It's quite conceivable that that got a little long in the tooth, and that balancing things out a little bit is for the better in the long run. So I haven't recently looked into those flows in that detail, but that would be my impression today. One thing I will say, you asked about what is driving inflation down. Is it China disinflation driving U.S. inflation down? I think that's part of it. I think if I had to summarize it, I would do it this way. So it's often said that inflation is more money chasing fewer goods. And I think what we have today is the opposite of that. We have less money. We have a contraction in money supply in the U.S., which has, with a lag, weighed on inflation. And at the same time, we have more goods. And we have more goods thanks to a couple things. One is that those supply chain disruptions that we had during COVID have eased significantly. Every measure, whether local, domestically or globally, of supply chain pressures has improved dramatically since 2022. And you've had big productivity gains in the U.S. Now, the big question is, will these trends persist or not? On the supply chain aspects, I think probably yes. I think the big global supply chain disruptions that we had during COVID are a one-off. Could we and are we seeing pockets of disruptions? Absolutely. The Red Sea, of course, comes to mind. But the U.S. depends very little on Red Sea trade. In fact, I imagine one of the things that's going to come up in this election cycle is why are we taking the lead? Why is the U.S. taking the lead defending a shipping channel it hardly uses? I mean, it's basically
because the U.S. is the world's policeman. That's what
exactly.
Biblical implications, I'd say. But anyway, that's another.
Yeah, but and that was easy enough to say 10 years ago. Now that the government is so indebted, deficit spending is so high, even during low unemployment periods. And now that debt is no longer free, that they're paying interest on it, I do wonder, I think I'm saddened to say, I'm afraid this will fit quite nicely into Trump's theme of NATO countries need to step up. And I think this will play into that perfectly. So
probably true. Peter, could I just add?
Not very vulnerable to it.
Believed years ago that Mexico would be the biggest exporter to the United States market. What a turnaround. That's amazing. Now, if you would have said the other way around, we export to Mexico, of course, but wow. And a lot of that, of course, is transshipment, things that are coming in from East Asia, and then they're assembled, and then they benefit from the free trade agreement. So that's a reality. The other thing is that I think that we should not be unaware that there seems to be some improvement in U.S.-China relations, because this Track 2 business, that you had the military people meeting in Beijing in November, then you had the two presidents meeting, and now you've got these several off-the-record discussion groups, if you want to call them that are being activated. This is the best news we've seen on bilateral relations in a very long time.
But I agree with Barry on that. I just want to add one point related to trade as well, and how much an impact this has, I don't know. But there were expectations among a lot of our members that those talks that you're talking about between Xi and Biden, there might be some movement on the tariffs and on trade. There was none again, and of course they were continued under Biden, and in some cases reinforced. That probably is discouraging some trade, some U.S. trade with China as well. To how much, it's hard to know, but certainly in terms of expectations, I think it affected some companies.
Barry, what's your assessment of why we're seeing this big decline in US-China trade? Is it that US consumers now have gone off of buying Chinese goods because of all the political things they're hearing about, or is it's just getting more and more difficult to get Chinese goods to the stores, or is it a combination of both maybe?
The short answer is I don't know. I think that there's a lot of things that contribute to these lags in data. Will, you're the expert on this. I don't know why. I don't think that you're seeing a real diminution. Yes, of course, we've talked about the offshoring in the sense of trying to minimize one's dependence on China, but the basic economic relationship has not changed.
Mark, given all of this, why is the People's Bank of China not cutting interest rates? They had an opportunity yesterday, didn't they, to do something and to match all the rhetoric with some real action. Economists were expecting them to do that. In a Bloomberg poll, 14 out of 18 economists expected a cut. But once again, they sat on their hands.
Well, I think you should turn this over to Will, because Gavekal Dragonomics just put out a paper on that very topic and sort of explained it, I think, pretty well. Will, do you want to comment on that?
Yeah, I mean, our China team was expecting a rate cut, like most people, and the best explanation we have for why they didn't cut was everybody was expecting it, and the PBOC wants people on their toes. They don't. I mean, the PBOC has a natural aversion to kind of being too friendly to investors and their herd mentality. They like to try and avoid that. So that's our best guess. I think taking a step back, it's probably mostly a timing issue. We do still think that they will cut rates probably in February or March. But again, just keeping market participants on their toes a bit. The bigger issue, though, is that this kind of fits into this narrative that Chinese policymakers are not ready to come out clearly in support of growth with stimulus. they've been sending mixed signals. They seem to be getting a little bit more market friendly toward the end of last year, and then surprised everybody with the gaming rule changes right on the eve of Christmas break, basically. But then that got walked back to an extent, and the person got fired. So then, okay, maybe things are still on track, and then we get this. And so for investors in China, it's hard. It's hard for money managers to go to their boards, go to their bosses, and make the case for China right now, because they'll come back and say, listen, growth is disappointed, policy is not clearly stimulative, regulatory risk is extremely high, geopolitical uncertainties are extremely high, and so what are you selling us on? And basically, the only thing you can say is China's cheap, and it is very cheap. And there is the saying that when things couldn't get any worse, they often don't. So things, China could be setting itself up for a big rebound if either growth can start to pick up or policy can be more clearly in the direction of growth positive. We just haven't seen that yet in either case.
Well, let me add to the production there is generally reliable and higher quality than elsewhere, and I think many companies feel more comfortable. Exactly what Will said. I think the expectations were, including among companies and a lot of people that we deal with, is that China was going to take action to stimulate the economy more strongly than it has. You can argue whether that's wise or not so wise, and so in not doing so, it just sets that back again. Just as a lot of countries around Asia are waiting for Chinese tourists to return, for them to come out to Southeast Asia, things like that. China plays an enormous role in not only the economies, but in the businesses of everybody that we're working with. And when expectations are not met, even modest expectations, then of course there are greater worries. And the pressure comes from headquarters and from shareholders who give a lot of these executives calls on often Tuesday morning, seeing the news over the weekend and saying, what's happening here? Why is the economy not moving? Should we think of doing something else, or should we think of cutting back, or whatever? They don't always do it, but it puts greater pressure on their investments, even regular FDI as well as financial investments.
Will, perhaps one thing I could add to your list of reasons as to why investors are staying away is also corporate earnings are being decimated by deflation now on the mainland. There's a hugely competitive environment, lots of price slashing going on now in just all sorts of industries. This presumably is another problem. Yeah,
absolutely. I mean, I would put that in the general bucket of growth being disappointing. Nominal growth, as you say, has been particularly disappointing. So yeah, absolutely, I agree.
Mark, your firms are seeing that, I presume. I mean, there's been a lot of talk about China needs to do something to stop the economy falling into a deflationary price spiral. Are there signs that that's already happening now?
Well, I mean, to some extent, and the worry also is confidence, consumer confidence, which we've talked a little bit about before, but that it hasn't come back, and the lingering effects of COVID and what people still want to save and not spend as much. And part of that has to do with all the issues that you're mentioning. Of course, disinflation contributes to that situation as well. So these uncertainties are adding. I'm not saying that the Chinese economy going forward, I don't know if Will and Barry would agree, looks reasonable in this year compared to a lot of other places in the world. It's just below expectations. Mm-hmm. And that obviously affects what companies decide to do or don't do.
But there is a very weak Sorry, Will, carry on.
I was just going to say on the disinflation, and I haven't studied China very closely recently, but Mark may have views from his members, but disinflation could be a good thing. It can set the economy up for being more competitive going forward. So, we should be prepared for that to potentially turn into a positive. But, for now, I think the disinflation we're seeing and the real growth slowdown that we're seeing is weighing on things. But it could set us up for a recovery at some point.
The problem is it's leading to a very weak consumption environment, isn't it? There's just no consumer confidence, and you're seeing that being reflected in the market in consumer stocks. They're the worst performers in the MSCI China index at the moment. So you're seeing, restaurant operators, department stores, the big e-commerce firms like Alibaba, all really suffering at the moment.
No, our members too, those that are in consumer businesses or are related to consumer businesses. The expectations, again, have not been met, even though they've lowered their expectations.
Yeah, Barry, final thoughts from you then on the interaction between China and the US economy. I mean, if we do see this deflation take hold on the mainland, which is economists' fears at the moment, if government doesn't act and if policymakers don't do something, how big a problem is that for the global economy?
I don't think it's a problem at all because lower export prices are good news for Europeans and good news for Americans. I mean, again, I would come back to this track 2 reactivation. I mean, whether it's going to be on investment or financial markets or just the nature of the Chinese versus the United States economy, this is a plus. The sort of soft response we've seen on both sides from the Taiwan election. So if China wants to have its exports more competitively priced, that's a good thing, not bad for the world economy.
Thank you very much for your thoughts this morning. Great discussion. Very, very interesting topics there. That's Barry Wood, our US economics correspondent over in Washington, D.C. You also heard Will Denyer, who is the US economist at Gavekal, and Mark Michelson, who is chairman of the Asia CEO Forum at IMA Asia.
You're listening to Peter Lewis's Money Talk. Money Talk.
Thank you for listening to Money Talk this morning. You can find more business and finance information from around Asia in my daily newsletter, which is at peterlewismoneytalk.substack.com. On tomorrow's programme, I'm joined by Enzio Von File, Capital Preservation Specialist at Financial Shield, and Mark Toe, Managing Director of Asset Management at the Wing Fung Financial Group. And with a view from Japan is Nick Smith, Japan Strategist at CLSA. Bye for now.
Money Talk.